Worst crypto crash in history. Today we'll break it down for you. It's going to be a good one. Let's just jump right in. I do want to thank our sponsor today, and that is Uphold. This is where you can start to buy these dips. One way to do that, of course, is using our link down below. You get into all sorts of things, including staking rewards over at Uphold, along with 300 plus assets, and you get another thing, which of course is access to new tokens over there. So that is one thing you can do, but you can add some stuff to that, and that is get the Uphold debit card. Just by clicking that link right there, it's going to take you over to the Uphold debit card, and you get XRP rewards with it. Use our link down below to get started and using Uphold. Let's get into a couple of points I want to hit on today. So when you look at the fear and greed right over there on CoinMarketCap, I'm looking at the 11/21 date. Now, this was during the last government shutdown that we had. It is very possible we could be nearing that same issue again. Government shutdown. Crypto has been taking the brunt of this. If you look at the shutdown in itself, right now it's kind of pointing at 4 days. I think maybe we're going to hover somewhere around the 6-day mark. Let me know in the comments how long you think this is going to run. Will it be longer than a week or inside a week? Just hit some comments down there. Let me get into the lineup of all things that happened just over the last week. And this is a big list. Monday, we had the Russell 2000 fell sharply. Tuesday, the dollar index, Dixie, went to its multi-year low. Wednesday, the S&P sold off. Then, of course, Thursday, NASDAQ dumped. And then, of course, we saw the liquidation from you-know-where, gold and silver crash, and that was a huge one. And then, of course, Saturday, Bitcoin and ETH sold off. Again, this is all looking at the government shutdown, along with other pressures that are applied here into the markets in general. Other things that are kind of going into this, if you look at the amount of liquidations right now on total crypto, 5 billion over the last 4 days, making it the largest wave of liquidations since the last time we had a major one, which was 1010, the fabricated liquidation that still haunts us to this day. Other things you got to look at is how long is this government shutdown going to last? Well, Mike Johnson's out schmoozing, but he should be trying to fix the government shutdown, and I've got a clip for you. Take a look.
After the Senate acted over the weekend, we will now have 11 of 12 separate appropriations bills approved by both chambers. Because they modified our package, they've sent it over a little differently, which means we've got to address the bills again. So they're going to separate the Department of Homeland Security bill. Our intention is by Tuesday, all agencies of the federal government, except for that one, and then we'll have 2 weeks of good faith negotiations to figure it out.
And just bottom line, you think you have enough Republican votes to reopen the government by Tuesday?
Yeah, because Republicans are going to do the responsible thing and fund the government. They're playing.
But you have a razor-thin margin. That's what I'm getting at.
I have a one-vote margin, yes, for the rest of 2026.
All right, we'll see if Tuesday is the day. A lot of that, it's even though it's a partial opening, the point will be is that the government will get back into session. Again, many people still thinking that gold and silver are what continuing to cause this market crash right here. Lost 10 trillion in 3 days. Crypto was wiped out 430 billion in 4 days. No obvious catalyst other than a couple of things. Remember, we had a Fed chair change, and that, of course, when I say change, being announced. Remember that Warsh is one of those that I think a lot of people thought maybe he was going to be a little bit more hawkish. The real question is, has he and Trump actually got a deal put together for cutting rates? I just don't know. Here's a clip that kind of talks about whether he is a hawk or not. Take a look.
He's a known entity. You've probably had some conversations, I'm guessing, over the years with Kevin Warsh. Is he a hawk or a dove? I keep seeing the word reinvented, new styling.
You got it exactly right. This is what troubles me about him. For 15 years, the man has been a hawk. Remember, he's been on the Fed before.
Yes.
Back during the 2008 crash, when millions of people were losing their jobs and economists were across the country were saying, lower those interest rates. He was the guy who kept saying, raise the interest rates, keep them up. He has been known as an interest rate and inflation hawk for years and years, right up until Donald Trump wins the presidency, makes clear that he wants a Federal Reserve chair who's going to lower interest rates. And suddenly it appears that Kevin Warsh has had an epiphany, and everything he thought in all those years beforehand, he no longer thinks. Now, you know what that says to me? It says to me that the guy is not independent, that he is willing to do whatever Donald Trump wants.
Well, let's find out, because as we watch Kevin Warsh roll into the confirmation next phase, that I think is going to have a major effect on Fed fund rates and maybe the outlook going forward. Remember, Chair Powell goes up until June. So he's going to get 2 more Fed meetings. And then, of course, we'll see Warsh potentially get in there maybe in the summer. That, of course, could be timing around inflation still peeling off. Remember, trueflation went under 1% for the first time ever, even though we had core and PPI rising, which is kind of a lagging indicator out of inflation. And that is one of the key cornerstones that, of course, the Fed has to deal with. If you look at what Raoul Pal has said, he says the last time the government shut down, yes, the market did exactly what it's doing right now, which is imploding. And until we start to see more liquidity, I think he is exactly right. This is still going to be ugly over the next few days, weeks, as things go in. And I think, again, there is a little bit of a morale problem right now in crypto. I think that we've seen this from many of the people we've interviewed, but I think everybody is pointing to 2 things. 1, the outlook for the Fed, and 2 is clearly going to be the Clarity Act. There is some signs, though, coming out of D.C. that shows maybe there is going to be a little bit more flexibility coming out of Clarity. I'm not saying anything new, but watch for some announcements this week. Other things I want to get to, just to show you guys, remember, this was the last time we had that major shutdown, and that was back in November. Let's see how far the market dipped on that point right there. If you go to where it was mainly coming right down to almost 21% during that time frame, went sideways from there. So it still is going to be one of those things, unless we get a market catalyst to where we could see a lot of sideways action in the market in general. Now, there are some other things going on that could possibly move more pain into the market. BlackRock, of course, is shifting another $600 million in crypto to Coinbase. Looks like we're going to see some more sell-offs, including both Bitcoin and Ethereum. And this is happening as we speak. Another thing you got to look at, of course, is this wipeout on gold and silver. Does it continue? Is the real question? Let me know if you guys think gold has leveled out and silver has leveled out, or are we going to see this completely retrace in excess of 20% for gold and silver? How does this look in just the coming weeks? Let me know what you guys think down below. I want to go to a clip real quick, because this one will get into a little bit more detail on what is next for metals. Take a look.
Price action, metals. Where does it go next?
Literally $1 trillion question, because we're kind of at this spillover stage. Obviously, those asset classes themselves aren't going to have that big losses. But what's interesting is that the pain that we're seeing, particularly in silver at the end of last week, but also gold, was very much kind of retail focused. And that's why generally where you're seeing most of the pain everywhere across asset markets at the moment is retail focused. It is the obvious tech names. It's in crypto. I think if gold kind of finishes 10% down again today, where it has kind of traded down to those lows, I think that's going to be really, really problematic. And then the other bit is then leading into the tech space. As we know, the big underlying theme of everything over the last year or the last couple of years is the AI theme. And we've talked a lot about how we believe we're in the expansion phase of that CapEx bubble, and therefore that's ultimately a bullish tailwind. But momentum traders have taken it too far in the short term. And it looks like it might get quite a bit worse. But while treasuries or while rates markets and FX stay a little bit more contained, there is hope that this may not spiral much more, but certainly we're on tenterhooks right now.
All right, that's Mark Cudmore. I like him. He's usually fairly level-headed, but however, if you look at silver, he is exactly right. This is currently trading at around $80 as we film right now. If you look at gold, holding it around 46, but defending, and of course we've got some big, nasty wicks. This, I think, is going to be the end of this rally for metals. Now, do we get a rotation? That's the real question, because if you look at rotation opportunities, this could go into stablecoins. Remember, still getting yields out there for now, and some of these yields are still fairly good because it's been higher for longer at the Fed, so we are still continuing to see that. Another thing I want to get to is Tom Lee. Now remember, this is, and I think, one of the historical great investors of our time. However, this may be a very interesting time for Tom Lee and BitMine. Here's him talking about the bottom or not. Take a look.
Did you use the word speed bumps or volatility? Is this worse than you expected?
Well, and parts of it have been much worse. Like, you know how I think the crypto market has taken it much worse than we expected.
Why?
I think part of it is the crypto industry doesn't have any leverage right now. It sort of delevered in October. And now when we have gold and silver doing so well, especially at the start of the year, that created FOMO.
The consensus now is for the GOP to lose the House. And that is not necessarily a negative.
I think one of the things that we're seeing, of course, this year is the White House is deliberately picking more winners and losers early, I think, because of the midterms. In other words, their agenda is front-end loaded. I'm going to say something that it sounds a little contrarian, but okay. Tom DeMark is our advisor at BitMine in terms of crypto. He's been since mid-November saying Bitcoin would go to 77 and Ethereum at 2,400. So he's been waiting for what he calls time and price to align. This weekend, he believes we reached that alignment. So all the pieces are in place for crypto to be bottoming right now.
All right, so if Tom is right, and let's just kind of point this out. If he is right and his analyst was, and I remember we reported on that analyst, and he is exactly right, 2,400, 7,700, or 77K on Bitcoin. If he's right, then this would be the bottom. The problem that I think is the wrench right now in the whole system is clarity. And until clarity is done in DC, this will be the tell of whether or not crypto goes into a deep bear market, or because if we don't get clarity through and we go into midterms, this could be a lost season for sure. If you look at BitMine, this would be the worst thing that could happen to BitMine. They are setting at 6.6 billion, now on track to become the 5th largest documented principal in terms of loss in history. If you look at Wikipedia, this goes back to a stellar list, including Morgan Stanley, JP Morgan. Listen, I know those are big names, but the point is they've had some fairly extensive losses in the past. This, of course, would be one of the biggest ever. Further into this, Tom kind of went right in on this. BitMine provided an update on its ETH and cash holdings. As they noted, there's zero debt, which is good, but another 4.3 million in earning staking rewards, which is another good thing at 2.81, even though he can earn more right now with stablecoins. And then 86 million of cash earning money market yields, which is the 3.5 to 3.9. That's good. Company is built to ride this out. I don't know if it is built to ride this out if we continue to see more pressure coming on Ethereum. If we see Ethereum go under that $2,000 mark, I think that's the one that would be kind of a no-fly zone for Bitminer. Bitcoin, of course, slipped below Masters average. This is another no-fly zone. 76K for the first time, the largest corporate holder, now setting in an unblended entry of 712,000 Bitcoin, which are on the books right now. Let me know, do you think MicroStrategy right now is in trouble or could be in trouble long term? I know a lot of people are talking about this. I've been in many spaces over the last week. This has been one of the biggest issues as Bitcoin has been falling and continuing to fall. Do you think that Master is in trouble? Let me know in the comments down below. This is a big one for sure. Last up, good news is that the tariff situation starting to lighten up a little bit. However, watch for another pivot. And I'm concerned every time I see one of these things, even though Modi and Trump have come to an agreement now, which means the United States will go to zero and will stop buying Russian oil. And in return, the U.S. is going to reduce tariffs over to India to 25 and 18. This is a big deal because India is the 4th largest power out there when you think about where we're going in the future of global power and geopolitical stature. India, one to watch for sure. So the fact that we've got a deal over there is good. Hong Kong also jumping in. They're planning to issue the first stablecoin license in March. This is a good thing because I think with this, of course, only gets more adoption and getting ready for the regulatory front that I think the United States will lead if we can get clarity through DC. This is a huge, huge time right now. Trump is also going in and saying we need a lot more minerals, so we're going in and doing another $12 billion to cut China's reliance. This is another position that Trump, of course, has been kind of really lining up the United States to become much more independent and away from what we've seen in the past, which is a lot of interesting connections to foreign nations around a lot of products and services like what we're seeing with minerals. Last up here is President Xi, of course, goes in and says, well, maybe the decade of the dollar is now here. And when I say the decade of the dollar to fall, and they're going after it, they're saying the yuan should become the global world reserve currency. Let me know if you guys think that is the case. Do you think China should have the reserve currency, or do you think the dollar is going to stick around longer and more powerful than ever? Drop it down below. We'll see how all this is going to play out this week. It is going to get interesting. If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.